Hey everyone, it's Steve Greenfield from Automotive Ventures, and looking forward to spending a few minutes with you today, wrapping up today's session. And thanks to Work Truck Solutions and Catherine for having me here, and look forward to wrapping up strongly for today's conference. Wanted to spend a few minutes today talking a little bit about the future. So Catherine and I had a chance to catch up last night at the end of day one, had a good catch up on the content, and hopefully everybody's really enjoyed things. We're going to pivot a little bit now and talk a little bit about future, what's going to happen to the industry, and some implications specifically on the work truck space. So you may know me from a monthly newsletter. You may see me on LinkedIn. I do publish a newsletter every month and keep track of both the technology landscape, but also M&A that's happening, transactions and acquisitions. And as you can see here, a good illustrative example, there's a lot of activity in the space, and it is quite hard for the dealers out there. I feel empathy because there's a lot of technology in the space and quite hard to make sense of it at times. So we'll dig right in. So let's start with the topic du jour, which is valuations. While today we might have had some challenging challenges in the stock market and with SPAX specifically, valuations are strong and at an all-time high, and not only an all-time high in the public markets, but also with valuations of companies. There's a lot of quote unquote dry powder and private equity and VC on the sidelines looking for good companies to invest in. COVID definitely helped accelerate software, specifically software that helps people collaborate and work from home. And as a result, as you can see here, public SaaS or software as a service companies are selling at an all-time high now, 16.5 times revenue run rate. That's not earnings, that's revenue, 16.5 times the annualized revenue. So it's very frothy times in the market and valuations are strong. This is a quick snapshot of earlier today. The Nasdaq, and as you can see, it was a pretty rough day in the market for technology stocks, down 300 points here midday. But you can see the run up. I have a 5-year view here. The Nasdaq's been very, very strong over the last 5 years, which again, we have a confluence of a bunch of different things, not the least of which is folks that are enamored with the software segment, but also an environment of historically low interest rates, which is having people search for anything that's not interest bearing. And as a result, the stock market and Bitcoin and other asset classes like real estate have been very, very strong. And there's interesting dynamics playing out in the space. So if you had a chance to look at my latest newsletter, I sort of indicated here just the proportional size of Carvana's market capitalization on the left-hand side versus all the other dealerships that are out there combined. And you can see they're pretty much the same at this point. Carvana's market capitalization, even just over the last year, if you look at versus just a year ago, quite strong run up. A lot of that is being fueled by a few different variables, not the least of which is the high valuations of technology stocks, but also the fact that COVID has been a catalyst across many categories, even outside of automotive, and with consumer adoption of online buying of many products, including cars, there's been many more tailwinds for stocks like Carvana, and it's just really hard to juxtapose their market cap today against every single other auto manufacturer or auto dealer on the right hand side. And you've probably heard of SPAX. I comment pretty much weekly on SPAX, but a SPAC is simply a special purpose acquisition company. It's kind of a fast path in lieu of an IPO to take a private company public. It used to be called a reverse takeover, sometimes called a blank check company. But as you can see here, the velocity or sheer number of SPACs is increasing greatly, and it's now becoming a substitute, an easier, faster substitute to IPOs. But there's a lot of appetite for private companies becoming public, not the least of which is because valuations are so high, and it's a good time if you're a private company owner to become a public company and have a public currency. And as you can see here, this is just a quick snapshot, a quick visual that I document in terms of actual transactions and investments that happened in the calendar year 2020. And I'm quite certain if we continue at the pace in 2021, we're going to have more transactions this year than last year. So, you know, my newsletter tries to capture what's going on in the space in terms of investments and acquisitions, and I try to document those and then keep tabs on those for the industry. So with that, that's kind of current state. You know, we're in frothy markets, and it's really a go-go time. It's been a great time to be in automotive over the last year for sure, despite a global pandemic. So let's shift gears and let's talk a little bit about the future. This is one of my favorite quotes from William Gibson a few decades ago, and I think that this is very true in automotive. The future is already here, it's just not evenly distributed. If we pay attention, we can see the seeds of the future all around us. We just need to pay attention to it. And we don't need to imagine too much, just need to be paying attention to our current state. I also love movies, among other things. And if you had a chance to see Interstellar, there's a scene where they land on that water world, and they're looking out at the horizon, and they see what appears to be mountains in the horizon. And Matthew McConaughey's character recognizes that those aren't mountains, they're waves. So that's his quote in this scene. And the idea where these waves are actually coming towards us at a very brisk rate. Didn't work out too well for them in the movie, but you know, I think right now, not only if we pay attention can we see, you know, the future, but we can also understand which of those waves are coming at us more quickly than others. And we'll talk a little bit now. We'll transition into a framework to sort of understand those waves. And I'm already getting my 5-minute time check, so I'll move through this pretty quickly. You hear about CASE or ACEs as an acronym to talk about the 4 big sort of like horsemen of change coming in automotive, and that's connected cars, autonomous vehicles, changes in ownership or sharing, the sharing economy, and then electrification. So I've got a few slides on each that we'll kind of move through and talk about implications in the future. But this is a handy sort of framework to keep in mind as you think about the big influences that are coming that will be affecting automotive. So let's first start with autonomy. There was a company that recently did go public via SPAC called Autonomy out of Israel. And there are sort of, you can kind of think of them as a layer between the vehicle and those that you want to use the data, and a layer of data that folks can plug into. They're worth more than $1 billion now. And you know, as these vehicles, we're able to harness data coming off of vehicles, there'll be entirely new billion-dollar companies, I'm certain, that are able to be built based on harvesting the data and harnessing that data for the good of the consumer and for the auto industry in general. One company I came across recently as just an example of this is Nemo Data out of Israel. And what they're doing is they're using existing telematics devices on heavy vehicles to analyze and predict when there might be failure of key and critical components, and then building a service schedule to make sure those vehicles get in ahead of any of those components failing. Just one example. Let's switch to autonomy. Again, I got to drop in a few movie references. If you like superhero movies, this is one of the better superhero movies over the last couple of years. Wolverine as an old man and trying to cope with those changes. But one of the things that I did pay attention to in the movie, sometimes sci-fi movies do a good job of sort of like predicting what the future looks like. Pay particular attention to these driverless autonomous vehicles, trucks that have a dedicated lane on the highway. We're actually not too far away from this now, where they'll be moving cargo autonomously across our roads, and we'll have to kind of stay out of their way. But this is a reality that is coming very, very soon, and we'll be seeing autonomous trucks on the roads. An example of which is Too Simple, which is a company that will be IPOing here later this year, which is sort of autonomous trucks. So we will very shortly start to see autonomous trucks and have to deal with the implications of that. I showed you a similar schematic earlier of Carvana versus the other dealers. This one compares Tesla's market capitalization on the left-hand side versus every single other publicly traded OEM on the right. And we're getting very close with parity, where Tesla will have the same market cap as every other OEM combined, which is a little bit mind-numbing. There are probably a lot of Tesla fans, I imagine, on the call today. They built a beautiful product, but it's a bit of a head scratcher if we get to the point where Tesla's market capitalization is equivalent to every single other OEM, but shows you, one, the tailwinds behind technology stocks, and just the interest specifically in electrification right now. And as a result of that, because of Tesla's market capitalization, it's really drawn a lot of these electric vehicle OEMs to market, many of which through these special purpose acquisition corporations or SPACs over this last year. And I suspect that we're going to see a lot more this year coming to market, both SPACs for electric vehicle OEMs, but also the charging infrastructure that supports EVs, especially if we get more stimulus from the top down, from the Biden administration, really encouraging consumers to buy electric. And we heard earlier yesterday from XL Fleet, this doesn't have to be a heavy lift of building a vehicle from the ground up that's electric. It can be retrofitting existing internal combustion engine vehicles, either with an entirely electric drivetrain or electrical sort of like hybrid components that help extend the range of a typical internal combustion engine vehicle. And then I'll wrap here because I'm probably at about time with, the future really will be based on data. And I know that sounds a little bit of cliche, but I would say that, our illustrious host has done an exceptional job, and I'll have to give a plug in to Catherine and the business, the business that she's built. But talk about looking at data and trying to figure out ways to map the data for the truck segment into ways that help dealers succeed in better merchandising and marketing and describing their products so they can actually generate more revenue, more profit. This is we're looking at with Work Truck Solutions a great example of the future in terms of understanding data better, mapping data better, but also making data more available for the benefit of the industry. And with that, I will move us over to questions. So we've got some time left. And if there are questions from the audience, please, you can either chat them or raise your hand virtually and we'll take questions. Okay, we're checking the audience if there's any questions. Don't be shy. If you got questions about any of these themes or anything that I didn't cover, please don't be shy and let me know. I'll say this, while we're waiting to see those questions, I do believe, and I've commented on this frequently, I do believe that in the next 5 to 10 years, we're going to see more change in the automotive industry than we've seen in the last 100 years. And I think that will span across the 4 areas that I talked about: autonomy, connectivity, electric, and ownership changes. But even in the retail model itself, I think we're starting to see that consumers will demand a far better experience, whether it be driveway delivery of vehicles for sale or for service. I think that connected cars is going to change the way that consumers interact with their vehicles, and specifically change the way that they interact and are communicated with by the OEM and by dealers. And I think that we're going to see a tremendous amount of change, which is going to be very hard, I think, for the industry participants to absorb, but also provide a lot of opportunities for the entrepreneurs of the world and the innovators to really help us navigate through those times. And then, there's a question from the audience regarding the future for sustainable and renewable fuels. I think that we will definitely see a top-down change in terms of stimulus and encouragement to move to electric. If you see countries like I saw recently last year that over half of the new cars sold in Norway, for example, are now electric. A lot of that is stimulus from the government trying to switch consumers to electrification from internal combustion engines. But to me, sort of like there's 3 variables that will really encourage a U.S. consumer to switch to electric, and that will be range, cost, and then the electrical charging infrastructure. And there's some tension between range and electrical charging infrastructure. Obviously, with increased range for vehicles, there needs to be less infrastructure. But I think we need to make progress across all 3 of those areas: price or affordability for electric vehicles, range, and the charging structure in order to really get a lot of penetration for new car sales. How long before a truck hits the road. So I think that we're talking about autonomous trucks. Well, I mean, they're on the road now, they're testing on the road, but in terms of commercial use, I suspect that we're going to see, commercial goods being transported by autonomous trucks. I would guess, if not by the end of this year, definitely by the end of 2022. So I'll go on the record that less than 24 months from now, we will see commercial goods being transported with autonomous trucks, likely in isolated routes to begin with, because they'll want to make sure that consumer vehicles aren't interacting with these commercial trucks that don't have drivers. But I think we're very, very close to having that commercialized. Okay, I think that's it. I'm going to wrap. So I would say, first, I'd like to express my gratitude for Catherine for putting on this conference. It's been an exceptional conference with exceptionally curated content, and my gratitude personally for allowing me to sort of provide the wrap up for the conference. And I will pass it over to Catherine.